want to thank everybody for giving us your lunch hour today. You're here for the Millionacres Lunch and Learn. Today's session is entitled The 5 Myths of Real Estate Investing, and we're going to go ahead and get the session started. So first and foremost, before we get into our discussion and introduce our great speaker for today, I want to tell you a little bit about who is Millionacres if you're not familiar with who we are. First and foremost, we're an organization that's dedicated to making real estate investing accessible to everybody. And certainly in real estate investing is something that if you're not a seasoned real estate investor, you may not know about it, you may not know how to get started in it, etc. You may have some misconceptions about what it means. And if that's the case, we're going to clear all those up today and tell you a little bit more about us at the end of the session. We're a Motley Fool service dedicated to making the world smarter, happier, and richer, all through real estate investing. We're staffed by experts in real estate investing. You're going to hear from a great one today, and I want to take a moment and introduce our speaker. This gentleman by the name of Matt Frankel. Matt's a certified financial planner and has been a Fool.com contributor since 2012. He's a graduate of the University of South Carolina and Nova Southeastern University. And after a few years as a high school mathematics teacher, he decided to combine his loves for teaching, writing, and investing to help people manage their financial lives better. So Matt, I'm going to go ahead and let you take over the driver's seat and sit back and enjoy the content.
Sure. Thanks, Kevin. Hi, everybody. My name is Matt Frankel. Like Kevin just gave me a very nice introduction. So there are plenty of myths about real estate investing. If it seems like a big mystery to people who are not invested in real estate yet. But since you all are here because you are interested in real estate investing, I would like to go ahead and take this opportunity to clear some of the myths up that you're likely to. Some of you might have, some of you might just not know a lot about real estate investing in general. So starting with the first one, that you need a lot of money to get started. And to buy a rental property, you probably, if you just want to buy a rental property in the traditional sense, you probably do need a fair amount of capital. Most lenders want a minimum of 20% down on a purchase price when you buy an investment property. And it's also a good idea to have a lot more in reserves than you think you're going to need, as I found out the hard way when I got started. So you do need a lot to buy a rental property, but that's not the only way to invest in real estate. Looking at those alternatives on the list right there, house hacking is actually the way I bought my first investment property. At the time, I was living in the Florida Keys. And if anyone knows anything about that market, it is a very expensive real estate market, and we couldn't really afford to buy a single family house there at the time. So what house hacking is, it means that you buy a property with more than one housing unit while living in one unit and renting out the others. This method has some advantages. And the reason it's on this slide where you don't need a lot of money to get started is that down payment requirements for homes that you live in can be much lower than down payment requirements for homes that are just pure investment properties. When we bought ours, we bought a duplex and we used an FHA loan, which has a 3.5% down payment, much better than 20%. And it also allows you to do some things like roll certain closing costs into the loan amount. So you really don't have to come out of pocket for a ton of money. For younger real estate investors, especially, I always suggest house hacking as a strategy to explore if you're really serious about getting started in real estate. And the great thing about that is once you've lived in the property for about a year, you're usually free under the terms of your mortgage to do the process again. So I actually know a few real estate investors who have built up a nice portfolio of multifamily properties with this strategy without using a ton of their own money. Going beyond just rental properties, there are other ways to invest in real estate. Real estate investment trusts, or REITs, are a big one. These are companies that don't have to, but most of them trade on the public stock markets. They are designed to make commercial real estate investment accessible to everybody. For example, there's REITs that own giant office buildings, giant apartment buildings, shopping malls, warehouses. Those big Amazon distribution centers are usually owned by REITs. So these investments have historically been the realm of the rich. Not many people listening to this, I know I could just walk out and buy an office skyscraper, but real estate investment trust can allow you to do just that. And you can get started for the cost of a single share, or even less if your broker lets you buy fractions of a share. So that's a lot of what we do at Millionacres. We'll talk about some of what we do in a little bit later. Um, but so that's a big focus. And then real estate wholesaling, if you're looking at it for more of a job, if you don't want a passive investment and you have time and you really want to learn about real estate, wholesaling is a strategy to look up and try to learn a little bit more about. Essentially, this means you do the legwork, you find great real estate deals, you get them under contract, and then you bring them to other real estate investors who will pay you a little bit more, and you make a profit off the difference. Essentially, you become a deal sourcer for real estate investors and get paid for it. Um, there's a little more to wholesaling than I could explain in just a few sentences there. Um, but if you're looking to get started and really want to learn real estate, because that's a job that really forces you to learn about how the real estate world works, what to look for, how to find great deals and things like that. Real estate wholesaling can be a great way to get started. And you don't need any money to get started as a wholesaler. You just need a lot of time and knowledge to get good at it. So the myth is you do need a lot of money to get started. That's not necessarily true. You have some alternatives that can be great ways to invest in real estate. And as I could tell you firsthand from house hacking and as a REIT investor, they can be just as profitable as owning rental properties. So that's the first myth. Number two, real estate is passive income. A lot of people think of real estate investing as something you do just to earn income. You buy a rental property, hire a property manager, your tenants pay you rent every month, and that's the end of it. Some real estate investments are passive investments. I am an investment property owner myself. I hire a property manager, and I can tell you firsthand that even if you have a property manager to handle the day to day, owning rental properties is not as passive an investment as you think. Um, I've had just this month alone, I've had to approve 2 different repair bids. I've had to answer a question about giving a tenant a rent for giving some rent during the COVID pandemic. It's not a passive investment as in the sense that just buying a stock. So investment properties are not that passive. And the great thing about real estate investing is there are various levels of involvement you can have depending on how you choose to invest. Um, so one thing you should ask before you start investing in real estate is how involved do you want to be? How much time do you want to spend? If you have the time to essentially make real estate investing your part-time or even a full-time job, the return potential gets a lot greater, but it's not a requirement. I have a full-time job and I'm a real estate investor. And it's because I intentionally choose investments that are on the more passive end of the spectrum. We mentioned REITs, real estate investment trusts. You should do some work to find the best ones to invest in, but once you hit the buy button on your brokerage account, you're pretty much done. Someone else is managing the portfolio, someone else is doing all the work behind the scenes. Your dividends are just show up in your brokerage account. So there are ways to invest in real estate that are passive, but not all of them are. All right. The third myth, and this is one that I'd like to spend some time on, is that real estate investing is easy. So real estate investing is easy, but it's not easy to be good at it. And that's a very big distinction that a lot of people need to hear. It's really easy to make a bad investment decision in real estate. So even the most passive forms of real estate investing aren't really easy. If you want an easy investment, I always tell people, if you want something easy, buy index funds, or just put extra money in your 401k, or choose a really passive investment if you want something that's easy. To invest in real estate the right way, you need to be prepared to commit some time to what you're doing. And I would advise you to learn as much as you can before you get started. I've written before about some horror stories about real estate investing, some of which were mine. I assumed that real estate investing was as easy as buying a property and hiring a property manager. When I did that house hack and bought the duplex, it was relatively easy because I had a lot of control and day-to-day involvement with the property. It was vacant when I bought it, for example, so I could select my tenant myself. Um, I had a lot of control over what was going on. So I'll tell you the story about when I bought my first property, which wasn't a great investment, but I mean, my first property that was just an investment property. It wasn't necessarily a great investment, but it taught me some very valuable lessons, and it's become a great property over since the time I bought it. It was a triplex in my market where I live now, Columbia, South Carolina. And when we went to see it, I just thought of it from a dollars and cents perspective. Um, the property was listed, I think, for 240,000. Between the 3 units, the rent it was bringing in was about $2,800 a month. That is more than enough cash flow potential for what I'm looking for. So, and I knew I had to act fast if I wanted to buy it. So we went and saw it, and when my realtor was showing it to me, we were only allowed to see two of the units. So we saw the upstairs unit, we saw the downstairs unit. They looked okay. They needed some cosmetic repairs, but nothing too major. The third unit, I was told, was occupied by somebody who worked at night, so I wasn't allowed to go in. Um, so long story short, that was not true. The reason they wouldn't let me in is because it was the most disgusting. I couldn't even imagine how anyone lived there. It was the worst apartment I've ever seen. Um, 2 feet into the door, I had fleas crawling up to my legs. I had, it was just a smell that just, I still can't forget to this day. But long story short, and I wasn't allowed to see that one before we made the offer. My inspector wasn't allowed to get in there because the tenant supposedly was sleeping. We were told we could come back at night, but the property was about an hour away from where I live, and that really wasn't a practical option. So I made a mistake and took their realtor at his word that it was essentially the same as the other units, and we closed on the property. And we ended up having to do about $15,000 of unexpected renovations just to get that one habitable, which really cut into our profit margin. It made that apartment sit vacant for 3 months when we weren't expecting it to sit vacant for 3 months. Um, the tenant, by the way, moved out the day that we closed without saying anything, and we found out why really quickly. So it sounded like the point being, a fully leased triplex sounded like a very easy investment. Pay the money, uh, transfer it to your property manager, they collect the rent, the end. But it turned out to not be that easy. It turned out to be much more of a job than we expected. Um, I learned some valuable lessons from that, especially when it comes to doing due diligence. But it also really underscores that real estate investment is not easy. Um, it's easy to do. It's not easy to be good at. Um, REIT investing is a similar story. Once you buy a real estate investment trust or REIT, it is a very passive investment. It's a good idea to read the company's earnings releases every few months. But other than that, once you buy a REIT, you're pretty much done the process. But there's a lot of due diligence that should go in before you buy it. Um, don't buy a REIT just because you think the properties are nice. You have to make sure it's a good business. Don't buy a REIT just because it's come down and you think it's on sale. A lot of REITs are cheap for a reason. Um, People who bought some mall owner real estate investment trusts recently because they thought they were cheap ended up losing their money when those REITs went bankrupt. So there's a lot to learn about real estate investing of any kind, no matter how passive. Crowdfunded real estate deals are another one that's pretty new that we love to focus on at Millionacres too. I actually bought into my first crowdfunded real estate investment earlier this year, and I'm still learning on that one. Essentially, that is when an experienced builder or developer sees an opportunity to either redevelop a project, develop a new commercial property from the ground up, and decides to kind of crowdsource some of its funding instead of putting up all of the capital itself. Um, on their end, it improves the economics of the project, and it allows everyday investors to share in an asset class that historically has not been available to them. So those really require a lot of due diligence. It's a relatively new field. It's tough to find great information. A lot of them don't update people as much as, say, a publicly traded real estate investment trust would. So real estate investing is not easy. It's worthwhile. I'm not trying to talk people out of it by any means. If you're wondering, why am I telling you that this is a hard thing to do if you're on this webinar? But real estate investing, it's worth the effort. It has much in historically, real estate investing has outperformed the stock market even, but it's difficult to be good at. It's really easy to lose your money in real estate if you don't know what you're doing, and if you rush it and just assume that it's going to be an easy time. So, moving on to our fourth myth. So myth 4 is the best way to invest in real estate is buying rental properties. So investing in rental properties, and I own several myself, can be a great way to build income and to grow your wealth over time. My rental properties are a big part of my wife and I's retirement plan, for example. We own a lot of rental properties around the university in my area. It's a great, always occupied market. There's always demand for good rental housing within a walk to campus. Great income stream, great way to grow wealth, but it's not the only way, and it's not necessarily the best way for you. Before you get into any type of investment, not just rental properties, but any type of investment, stocks, bonds, mutual funds, whatever, you should always know the downside. I always tell people that before I make any investment, I try to talk myself out of it. And if I can't talk myself out of it, then that's when I invest. So with rental properties, there are 4 major downsides that you need to be aware of. One, we already discussed that rental properties generally have a large capital commitment. There's that exception for the house hacking strategy that I was talking about. But in general, you're going to need a pretty sizable down payment, especially for multi-unit properties. The down payment requirement's generally 25% or more for a property with 2 or more units. And you'll also need some money in reserves if you have surprises like I dealt with the first time I bought my first rental property. So a large upfront capital commitment. Income is variable with real estate. This is one thing that beginners tend to not account for as much. Not just surprises when you close on the property, but at some point your property is going to sit vacant for a month or two, hopefully just a month or two. One of the rentals I bought in a college market, we happened to close in September after all the students had already found housing for the fall. So that one ended up sitting vacant until the end of the semester because we had a choice. We could either lease it long-term for a big discount, or we can wait until there was demand in the market when there was a semester break, and that's what we had to do. So vacancy is a big risk. Maintenance is a big risk. Over the summer, I had a tree fall on one of the roofs of one of my rental properties, and it caused just enough damage that it wasn't worth going through insurance. So that's a big risk, is unforeseen maintenance costs. Your income will vary over time. Rental properties they're a great way to build an income stream, but it's not going to be a consistent income stream. You're not going to get X amount of dollars every single month, month after month after month. There are going to be unforeseen expenses. 3, the time commitment required. I hire a property manager for all of my rentals, but I spend a lot of time trying to find the best rental properties. If you haven't looked at 100 rental properties, at least the listings online, before you've narrowed it down to a few, you haven't done enough research. Really, I would say I look at over 100 rental properties for every one I actually see in person. It's tough to find really good real estate deals, especially right now in today's market. Real estate markets are very hot right now. Properties are very expensive. Historically, in most markets, a lot of markets in the US, they're at all-time highs. So there's a lot of time commitment involved in rental real estate investing, especially when you're looking for a property to buy. And 4, rental properties are not liquid. The definition of liquidity in investing is the ability to quickly sell an asset without having to sacrifice its market value. So if I have a rental property that's worth $200,000, if I were willing to put a, say, $150,000 price tag on it, I could sell it tomorrow if I wanted to. But if I want to sell it for a fair price, it can take months to sell rental real estate. So it's not a very liquid investment. If any of those don't sound like your particular cup of tea, another type of real estate investing might be better for you. For all four of those, there are types of real estate investments that can eliminate those pain points. Large capital commitment. I mentioned real estate investment trusts. You can get involved with literally $20 if you want to. Variable income. There are a lot of real estate investments set up to produce steady income. There are some real estate investment trusts that invest in very stable types of properties, for example, that have increased, not only paid a consistent income, but have increased their dividend every year for decades. So time commitment required. Pretty much every other type of real estate investing has a lower time commitment than buying physical properties. Crowd-funded real estate opportunities, real estate investment trusts. There's buying real estate mutual funds, or ETFs is another one. All require less of a time commitment than buying rental properties. And the liquidity factor, if I buy a real estate investment trust and want to cash out, I have to click a button and I can sell it for full market value in a second. That's something you just don't have with rental properties. On the other end of the liquidity spectrum are those crowd-funded real estate deals I was mentioning earlier. Typically with those, whoever's offering the deal sets a target holding period, and you're pretty much locked in until they complete the property and sell it, or otherwise cash out. Usually it's anywhere from 3 to 10 years. So those are the extreme not liquid investments. So the point is, there's a large spectrum when it comes to all four of these factors. And depending on your personal preferences, a different type of real estate investing might be better for you. I like rental properties because I don't rely on them for income yet. I'm about 40 years old, so I don't rely on my properties for income just yet. So I'm willing to deal with the variable income. Large capital commitment is why I don't own more rental properties. That's why a lot of my investments are in real estate investment trusts, because I can, add to them a little bit at a time instead of needing to come up with a lump sum of cash. I have some time to spend on my real estate investing, but not a ton. So that's why I am not a wholesaler. I don't fix and flip houses, for example, or any of the really time heavy options. And I'm not too concerned about liquidity, but I want some liquidity, which is really why I invest in a combination of different strategies. I have rental properties. I have a crowd-funded investment that I recently made. I have a pretty diverse portfolio of real estate investment trusts, and each one has its pros and cons. And the best way to invest in real estate for you might be a combination of them. But if a certain aspect, for example, liquidity, is a must-have for you, there is a type of real estate investing for you. So with that, I will move to the fifth and final one. Myth number 5, and TV shows have really, perpetuated this one. Real estate can get you quick profits. So I'd emphasize the word can in that sentence. Real estate definitely can get you quick profits, but don't count on it. Fixing and flipping houses is what people see on TV. It's the potential for quick profits. Someone buys a falling down house, fixes it up, and makes $50,000 in a month or two. It's not quite that easy. To get to that point, you really not only need to know what you're doing. Most of the people you see on TV have done this hundreds or even thousands of times, but you also need a great support team, meaning contractors who will do whatever you need them to do at the drop of a hat because you give them so much business. It's a really tough business to get into and learn how to do well, and to account for variable costs and to predict what a property is going to sell for after it's repaired, and predict how quickly you could sell it after it's repaired. And to get financing for a fix and flip is a whole We could fill a whole half-hour webinar just on short-term investment property financing. So it's not quite as easy as it looks on TV. It definitely has profit potential. Fixing and flipping houses is a job. I can't emphasize that enough. If you have a full-time job, fixing and flipping houses is probably not for you if you ever want to spend time at your house. Um, Wholesaling, I already mentioned, that's where you essentially do the legwork and find great real estate investment opportunities for other investors. Can be very profitable. It's very difficult to learn and very time consuming for those who are successful. But I do know a lot of people who got their start in real estate investing that way. I was on a panel discussion yesterday, and one of the other guys, he said he made his first $5,000 in real estate in a month when he was in college by learning how to wholesale. But you really have to be all in on something like that. With rental properties and real estate investment trusts, you can get lucky and make quick profits. That's especially been true this year. In 2020, if you bought a rental property in certain markets in, say, January or February, it could be worth 15 to 20% or even more than you paid for it at the current time, and you could sell it and make a great profit really quick. There are real estate investment trusts that were trading like penny stocks in March when the pandemic happened that are now trading for 4 or 5 times what they were in March. So you can make good profits with those. There are REITs in my portfolio that I bought in March and April that I could sell right now and make quick profits. It's possible, but that shouldn't be your goal going in. Real estate is generally best suited as being a long-term investment. Unless you're planning to treat it as a full-time job, meaning you're planning on really learning how to fix and flip houses, or you're going to get some rental properties and build a portfolio and self-manage that portfolio. That could be a great way to make outsized profits. And even that's not very quick. Wholesaling, if you're all in and spend 40 hours a week on wholesaling, it can be very profitable and get you quick money. Unless you're planning to treat it as a job, real estate is best suited as being a long-term investment strategy. And it can be a great way to build wealth and income over time, but don't count on making money quickly in real estate. That's not the goal. The goal is to build wealth over time. And like I mentioned, historically, real estate has outperformed the stock market. Over the past 100 years, real estate has delivered better returns than the S&P 500, and with about half of the volatility. In March, when the stock market was going crazy, and a lot of people on this call probably saw their 401ks plunge, no one really stopped to think what happened to the value of my house. I wasn't glued to Zillow checking the value of my rental properties the way I was glued to TD Ameritrade checking my stock portfolio. So not only can real estate build wealth and income over time, but it does so with a lot while letting you sleep at night a lot better than a lot of other investment classes, particularly stocks. So those are 5 myths of real estate investing. We are actually right on time to kick it back over to Kevin. So thank you so much for your attention and tuning in, and hopefully you found this very informative.
Yeah, that was awesome, Matt. I always enjoy sitting on these because I always learn a few things myself in sitting on these. I think if you could get a couple of takeaways from the session, there's varying levels of complexity to real estate investment. On one side of the spectrum, it's becoming your full-time job, whether you're a wholesaler or a house flipper. On the other side of the fence, it's a different type of investment that you can add to your portfolio, but do so knowing that it's the type of investment you're adding to your portfolio that's more stable and long, far out looking than stocks. But that's one of the reasons people really want to add real estate to their portfolios, is to add a stabilizing element to their portfolios, which real estate definitely brings. And as Matt mentioned, all the statistics show that the performance of real estate has been better than the S&P 500, dating back some time, definitely since the 70s. There was some tracking of that. So, I mean, if this is something that you want to bring 13, 14, 16% per year, how do you get started? Real Estate Winners is a service that Millionacres developed exactly for investors to get started. It's a subscription service, basically, where you can sign up for $249 per year. There's no secret fees. There's no additional fees that get thrown in after the fact. It's really just a flat rate subscription fee for $249 per year. And with that, you basically get recommendations, you get analysis from the team here at Million Acres, and try to help you determine, how to break into this, how to get involved in an asset class that most billionaires, frankly, are involved in. So, using things like our investment alerts, we're going to help you create a real estate investment portfolio. And it's really something that's not going to require a tremendous amount of time or effort. We're doing all that for you. That's the value ultimately of the service. So if you like what you heard today, if you think that, you do want to start to add, at least from a portfolio level, real estate investment, this is something that absolutely is worth its weight in gold. And, we hope you'll take advantage of it. To get started, if you want to get started as a result of this, just go check out fool.com and then /millionacres lunch. So that's the URL to use. It's up there on your screen. And we'll certainly shoot an email out to folks afterwards as well. It'll have that URL that you can go ahead and link to that. That's the page where you can go in and basically sign up for the service. And then, it'll also, when you go to that page, it'll list out some of the different kind of monthly features that you get from it for the $249 per year. But definitely check that out. We want to thank everybody for your attention. We hope it was a worthwhile lunch, 30 minutes for you. Be on the lookout for more of these as we come into 2021. And I think we'll go ahead, Deirdre, and wrap the session up. And again, thank everybody for your attendance. Have a happy holiday.